morning, everyone, and thanks for being with us today, the third day of our LuxFLAG Sustainable Investment Week 2021. But before we start, we at LuxFLAG would like to take a moment to thank you all for your support during this last very difficult month since the tragic passing of LuxFLAG's General Manager, Sachin Vankalas. Sachin was being a tireless supporter of sustainable finance. He exemplified LuxFLAG with his passion, ambition, and drive to move to a sustainable future. Thank you. In my role as Acting General Manager of LuxFLAG, I'm very pleased to see that after 2 editions, the LuxFLAG Sustainable Investment Week has already gained recognition. And that is thanks to LuxFLAG's associate members who are showcasing this week where they are in the sustainable finance journey. Given the industry is on different stages of that journey, this week is about sharing best practices so we all advance towards the goal of making all finance sustainable at one point in time. For the 3rd edition of the LSIW, we'd like to thank you for such a positive response with over 3,500 registrations. I mean, this is amazing, and I'd really like to thank to our host partners as well as our media partners. The 25 sessions over the week cover the latest trends and most pressing issues in sustainable finance. We hope you find them useful, but also that you find inspiration in the progress being made to harness finance to help find solutions to our current environmental as well as the social challenges. A few words on the housekeeping. The slides and the recording of this session will be made available to you sometime after the LSIW. For Q&A, please use the Q&A function at the bottom right of your screen. In case we don't get to have enough time for all the questions at the end of the session, the questions will be forwarded to the host for subsequent responses to you directly. But now, without any further ado, let's talk about the session. I'm really pleased to welcome you all to the first session of today, hosted by Union Investment Luxembourg. Union Investment is set up since over 30 years in Luxembourg as the asset manager of Union Investment Group, which is part of the DZ Bank, one of the largest banks in Germany. Union Investment engages responsibility as an asset manager by actively accompanying firms on their way towards a sustainable transformation. I'm sure it will be very interesting to hear from Union Investment about the green transition and the shaping of our future, and actually their approach to that topic as an asset manager themselves. For that, I'm pleased to introduce the excellent speaker we have with us today, Ms. Diana Lind. Diana is an ESG analyst, capital markets and stewardship at Union Investment. She holds a master in economics from the Johann Wolfgang Goethe Universität in Frankfurt and is with Union since about 6 years, engaged in different ESG matters. With that, Diana, the floor is yours.
Yeah, thank you for introducing words, Michael. So I will start with my presentation. And as Michael have told you, I have brought with myself Green Transition, Shaping the Future. So in the next 30 minutes, I just want to give you an impression how we are tackling transformation within Union Investment, how we are identifying companies which are on a transformational path. And I would like to start with a short introduction of my team. So we have the largest team in Germany, existing or having 17 analysts. So we are a very diverse team in terms of age, in terms of sex, in terms of study background. Our head of ESG is Dr. Henrik Ponsen. So he has a lot of experience in terms of sustainability and integrating sustainability in terms of risk management, and everybody of us has its expertise in some aspects. So I'm focusing on the consumer goods sector and focusing on ESG integration within the equity and fixed income departments. So let's move on to our next unique selling point, which is CIRIS. So CIRIS is or stands for Sustainable Investment Research Information System. So it's a digital platform which we have developed some years ago. It's our proprietary platform, and it's great that everybody within the portfolio management can use this platform, and we can share information in terms of ESG to all of them. And as you see, so we have ESG analysis for around 15,000 companies, which is translated in around 44,000 securities. So this is a very large coverage, as we use different data providers like MSCI or ISS. But the most important aspect of Ceres is that we can integrate our own research, our own new investment research within the platform and finalize the results. So we are not only relying on data providers, but we are doing ESG analysis by ourselves. So far, we can see that there are different approaches, and ESG is a very evolving topic. So if we focus on the status quo, we will see that most of the asset managers are tackling ESG in terms of exclusion. So we are identifying which companies should not be part of the portfolio. Others are using best in class. They're referring to company analysis, KPI management, and using engagement and voting. So those are very common approaches, which we have used the last years as well. But we have identified some gaps, which you see here in the middle. So you see that all those approaches within the status quo are not able to make transformation or worst in class more identifiable for us. So the ESG method of data providers have some gaps or challenges. We see that data provider results can be very dispersed, or we can see just different signals which are going on. And we should not ignore that brown companies can offer high potential, but within best in class, we are not able to capture those developments. So ESG is often just a status quo assessment. So we are just referring to what the company has done so far, but we are not looking in the future what the company is doing and how the company is evolving. And that's the reason why we have developed our new approach, which is the transformation rating, that we combine our fundamental and ESG analysis. So we are working quite intensively with the ESG analysts and with the portfolio management on the equity and on the fixed income side. And thereby we are talking with the companies, we are identifying KPIs for each sector and trying to understand which kind of KPIs or goals has the company identified for itself. So are there any ambitious and credible goals for the future in terms of climate neutrality, in terms of supply chain management, and is the company changing towards a more transformational path? And thereby, we are using this transformation rating in order to identify companies which are credible, which are transparent, and in order to highlight those companies which are ahead of their peers. The basic idea is that we want to buy caterpillars to offer butterflies. So we cannot wait until the transformation is all over, because then the performance is gone and we are just entering or investing in the company at a very late stage. But what we are trying to do is to take those KPIs to see whether the company is changing, having very ambitious goals, and if we are confident, we will invest in those companies in an early stage, because we want to capture that added value from transformation by entering at an early stage. So this has, on the one hand, performance reasons. So we see that companies which are contributing to the ESG case have very high valuations, and if we enter in those companies which are at the early stage, we can capture that additional performance. And on the other side, we just want to have an impact. by investing in those companies, we become shareholders, we can talk to the companies, we can demand changes, we can support those companies on their way in order to become more sustainable. And that's the reason why we want to enter at an early stage. I have brought some additional slides to give you other reasons why we just need to focus on transformation. Because if we have a look at the taxonomy, we will see, based on the Green Bond Index by Merrill Lynch, that none of the companies of this index are fully compliant with the taxonomy, and only 2% are probably compliant with the taxonomy, which just shows we cannot rely on just a small basket of companies, but in order to fuel the transformation within the economy, we just need to rely on more companies in order to make that possible. And if we have a look at the DAX companies, which have the biggest carbon footprint, we see that those companies are having problems in terms of sustainability. But on the other side, we just can't ignore that those companies are changing in a rapid way. So if we focus on the absolute carbon emissions of the last 5 years, we will see that in relative terms, the companies have significantly reduced absolute emissions. So we see those companies are changing. They are coming from high levels, but they are merging to lower levels, and thereby we can have a high impact investing in those companies, in companies which are changing in a rapid way. Another reason, and this is just combining the arguments which I have already given to you, is the performance aspect. So you see ExxonMobil and you see Shell on the bottom. So most of the investors and clients would say energy companies are not compatible for sustainable portfolios, because those companies go hand in hand with a large carbon footprint. They have a lot of, there are a lot of controversies involved, and so those companies should not be included in sustainable funds. This may be right for ExxonMobil and Shell, and in the last months we have seen that those companies are not performing well in terms of sustainability. So with Shell, we have seen that those climate plans and climate goals are not ambitious as they could be. So investors are demanding more action, demanding more ambitious goals in order to be compliant with the Paris-aligned Paris Agreement. And for ExxonMobil, it's actually the same. So we have seen activist investors with just 1% of the holdings, entering the AGM, introducing the topic of climate goals which need to be reversed, and just seeing that a lot of investors have the same opinion, believing that the that Shell or even ExxonMobil are not as ambitious as they could be. But we are just looking at Neste on this slide. So ExxonMobil and Shell have not outperformed the energy sector, but Neste has. And some of you will ask, who is Neste? I've never heard of that company. So it's a Finnish company, and it's a company belonging to the energy sector. And some years ago, Neste has decided to focus on biodiesel. And we have seen a quite significant outperformance of the energy sector for the last couple of years, because Neste is a structural winner. So due to the increasing regulation in terms of CO2, Neste is a very interesting and attractive company because it relies on biodiesel, and we see an increasing demand for biodiesel. So Neste has understood in which environment it is working, and has at an early stage started to change its business model. And that's what it is about transformation. So you see, with transformation we can have impact and we can generate performance, because you will not wait until the outperformance has been seen in order to enter Neste, but as an investor contributing to transformation and supporting companies which are involved in transformation, we would enter here and enter at an early stage in order to capture that outperformance. But of course, it's important to understand whether the company is involved in credible transformation or not. But as Neste has started to invest significantly in biodiesel, in that technology, it is actually a credible goal and a credible commitment for the investors that the company will stick to that technology in the future as well. And the second aspect is impact, because being an investor, being a shareholder, we can talk to Neste, we can just support them within their transformation and give additional guidance. So I think this is a good illustration why transformation is useful for us, is helpful for the companies as well, because if we just wait and just invest in those companies which are very sustainable at the current stage, we will very, very small portfolio, but will not be diversified, because we're just relying on the best 1% and not capturing all the potential which we see below that. Yeah, I have brought additional slides in order to show the difference between our ESG score and the transformation rating. So the ESG score will still be available within Ceres. So the ESG score has a very high coverage, which you have seen on the slides before. It's quantitative. We have data-driven values which are coming from our data providers, and it's available for very big investment universe. But the ESG score has downside as well. So it's a retrospective indicator, as I have told you, which we are just evaluating what the company has done so far. The ESG score cannot capture what the company will do within the next 5 years. So the ESG score is not able to capture transformation. With the transformation rating, we are able to differentiate ourselves in terms of active management, because the ESG score can be used by passive investors as well. So passive investors can introduce exclusion. They can introduce ESG scores, but they cannot generate transformation ratings, because this is a very time-intensive approach that we're using. So we are cooperating with the equity and fixed income analysts. We are talking with the companies, so we are engaging. We are collecting information within the sustainability report, within any other official websites of the company. And what we are trying to do is that we try to identify the most important KPIs for each sector, which give us some guidance in terms of transformation. So is the company heading towards transformation? Is this transformation credible? So for example, if the company is investing significantly in new technologies, in the development of new sustainable products, we believe that transformation can be credible, because the company is using a lot of money and just showing us that they want to stick to that path in the future as well. So it's a forward-looking, it's a qualitative approach, which is research-driven and is using all the elements which we are using within our fundamental analysis as well. Of course, there's a downside too. So it's a very time-consuming approach. We cannot offer the same coverage as for the ESG score, but for this year we cover 270 issuers on the equity and on the fixed income side. So those companies in which we are highly invested, those are all covered, and for the next years we are planning to extend our coverage as well. Yeah, just giving you an additional reason why we believe that qualitative judgment is key within ESG. I just want to give you an example with Tesla. So if we ask the three global ESG data providers how they would assess Tesla, we come to different results. So you see that with MSCI, Tesla would have a quite good rating. With Sustainalytics and ISS, it would be below average. And that just shows that data providers have different opinions. So depending on which data provider you use and depending on the methodology, you will just notice that we will come to a different result. And how should we as an asset manager work with those information? Of course, we can just take the average. Of course, we can overweight or underweight specific data providers, but we will just come to a result which is not optimal. So just imagine that you go to a doctor and you have a feverish head and freezing feet, and the doctor would just say, so on average your body temperature is okay because it's in between. I mean, this would not be a good decision making, and it's the same for investing in companies. Just taking data, just taking the average is not a good approach. We just have to understand how the data providers come to those results, understand their methodologies, but at the end we just need to use qualitative judgment. We have to decide whether the data providers are right or wrong in that case, and just have an own view on the companies. And by engaging in those companies, being shareholders, being on the AGMs, we can just have a much better picture than data providers in order to assess those companies. But of course, we have to bear in mind that sectors are different and transformation potential varies by sectors. So looking at the utilities, we have to understand that the product and process potential in terms of transformation is much higher. So those companies within this sector are developing in a quite rapid way. So the benchmark for those companies being identified as a transformation leader is much higher than for other sectors. So just have a look at the telecommunication sector below. So we will see in terms of product transformation potential, the companies within this sector have not a lot of options because the product will stay telecommunication. Within the processes, we can just have some additional efficiencies which can be introduced by the companies. But again, it's not a very transformational sector, so we just have to bear in mind that we compare apples with apples. Now I have brought you two examples. So the first one is Nike, in order to make it even more clear what we mean with transformation. So you see our dimensions, which include strategy, investment, and governance. With strategy, we just want to understand which goals the companies have formulated in terms of climate neutrality, in terms of supply chain management, in terms of employee satisfaction. Then we want to understand whether the company invests in the fulfillment of these goals. So you see R&D expenditure, sustainability or improvement of working conditions could be such KPIs. So those are the KPIs for the consumer goods sector, but for other sectors, they could look quite differently. And then below we have governance. So we need the right strategy, and we need the right investment, so the right budget, but at the end we need the right governance structures in order to make those fulfillment actually work. And it shows us that sustainability targets need to be addressed within the executive remuneration. So if sustainability targets are part of the remuneration, then ESG is top priority, and the company will do a lot in order to fulfill that strategy achievement. So you see, for Nike, we have different KPIs ranging from brand fit with sustainability to environmental reduction targets, which include carbon emissions, water reduction targets, or plastic reduction. Supply chain management is a very important topic for that sector, and we can see that Nike is quite doing a lot in terms of supply chain, because they have understood that this is actually the bottleneck for them and for this sector. And we see to all those controversies within this year that it is still a very important topic for those companies within the consumer goods sector, and that they need to tackle those issues. Within investment, we see R&D expenditure for sustainability and improving working conditions. So here we would like more transparency from Nike. So we see in terms of strategy formulation, they have several goals. They are pretty strong in supply chain management, but again, we just need to understand how much money they're investing in those topics in order to be more convinced from their transformation. And in terms of governance structures, we would see further developments. So as of now, we just have not the transparency we would like to see, and that's the reason why we have quite a mixed picture with Nike. Let's move on to the next example, which is Deutsche Post, where we'll see we have less KPIs. It's a different sector, it's the transformation sector. So we're using less KPIs, and we can see that the Deutsche Post is very good addressing those KPIs we have identified. So in terms of strategy, they have an absolute carbon emissions goal. So they want to reduce absolute carbon emissions by 35% by 2030. And in absolute terms, or you can compare it to 46 million tons CO2 if they would do nothing. If they would grow and do nothing in terms of carbon emissions reduction. So it's a very ambitious goal, which we can see here. Then we have the investments. So they're investing 7 million in aviation, in alternative aviation fuels, in addressing the electrification of the last mile. So they have really new approaches, pilot projects in order to find new ways how they can deliver the packages. And then we have the governance structure, which is very making me actually very happy to see that the company is addressing or awaiting 30% sustainability goals, sustainability targets within the executive remuneration, showing that in the short term, the achievement of sustainability targets has a very high priority for the company, and it's actually showing that we have a strategy which is very ambitious. The company is investing 7 billion in terms of alternative fuel systems and fuel projects. And then we have the governance structure where sustainability targets are weighted with 30% within the short-term remuneration. So it's a clear transformation candidate from our point of view. So to sum up what you have heard over the last minutes is that we try to identify transformation, and it's all about transformation because we do not want to be involved in any greenwashing activities. So it's very important to understand what kind of targets the companies are setting, whether they're investing, whether they have clear commitments, whether they show us goals for the next years. It's not enough just to have a long-term goal for 2030, 2050. It's very important to understand what the company is doing for the next 3 years. So our transformation rating is forward-looking, it is balanced, and it is determined because we're trying to capture all those aspects. We are using qualitative factors, trying to convert them in a quantitative score to make transformation actually measurable. Thank you for your time. Thank you for listening. And now we are going back to Michael.
Thank you very much, Diana. That was a very thorough and insightful presentation. Thank you very much for that. And actually, it's quite interesting also what you're saying, because you're not actually looking at the status quo of ESG anymore. You basically really take the transformation potential of investee companies into account. I mean, this is also probably one of the things that I would like to have a question to you on, because as you described it in very much detail, it requires a qualitative approach. But we also know that basically the data challenge is right now at hand, even though data is getting better day by day, and we will see that also with regulatory change, that there's more data coming to the market once basically firms will be required to disclose more and new standards being applied. But could you maybe spend a minute or two and explain to us, how do you really approach the data challenge, especially when saying that you're forward-looking? How do you basically get these data points, also taking into account the example you described, and I think it was quite striking with Tesla, that basically data providers, they are quite diverse in terms of their assessment of certain companies. So what's your view?
Yeah, so I think this is a very important topic. Of course, we use data providers as a first input, and we will rely on data providers as well, because they can give us an first overview about the company, about the assessment. And as you have said, data is becoming better, so we are getting more transparency with the taxonomy. So data will always be key, but we just see that there are some gaps in terms of just using data providers, because you are missing some aspects. You have, for example, MSCI, which are relying on 5 to 7 key themes in order to evaluating companies, and this is sometimes too, there are not enough KPIs. So what we are doing is that we just take data providers as a first input, but develop our own KPI set and try to talk with those companies. So we are relying on official website information. We are relying on the sustainability report. So going back to the raw data, yes, what the company is actually providing. And then we have different initiatives as well. So we are talking with other investors. You have other initiatives like science-based targets or the human rights benchmark, where you can receive additional information on companies. So we are using all those information in order to assess the company from different angles, and at the end we will come to a conclusion and decide whether this company is a transformation candidate or not.
Thank you. And maybe coming also back to another point you just mentioned again, but also was part of your presentation, because you said also there you're early stage investors, so you basically want to combine basically it with the engagement in order to spur transformation. And this is eventually a very sensible approach, no doubt about that. But then you also talked a lot about, or gave examples of really large cap companies. I mean, you mentioned some of the DAX companies in your slides. How do you see personally, actually, the future of those large caps or large caps in general, especially because engagement as a tool is probably, in contrast to small and mid caps, less powerful simply because the size of power that you can deploy is lower. So how do you see that in the mid to long run?
Yeah, very good question. So I think with large cap, of course, we hold a lower share of those companies. That's clear. But we have the possibility to be involved in collaborative engagement, to come together with other investors and to make additional pressure on those companies. I think the good aspect with large cap is that a lot of not only the investors, but also the media is talking about those companies. So they receive a lot of pressure and they just need to do something, because with the DAX companies or with the Eurostoxx 50 companies, they just have to come with very innovative new approaches how to address climate change. We just cannot rely on small and medium-sized companies. Of course, they have new ideas. We see startups with great ideas, but it's not enough to just rely on those companies. So I've shown you this slide with companies from the Green Bond Index being compliant with the taxonomy. And as we have seen, so it's just like a very low share, a very low percentage of companies. So we just have to, engage with those large cap companies, because if they are changing, we can just have a much higher impact. And they just experience so much pressure from the media, from investors, from different sides. And by engaging in collaborative engagement, we are very happy or confident that changes will be made. And in terms of engagement, I can just give additional examples. So with Bayer AG, we have seen the acquisition of Monsanto, and we were not very supportive in this regard. So we have not supported the board of directors due to this Monsanto acquisition for the business year 2018. And what we have seen is that the Bayer board of directors had understood that they need to change, that they need to engage with us. And so I think in the beginning of this week, they have published their lobbying activities report. So, and being very transparent in terms of lobbying activities. And I think it's just the result of all this engagement, what we have done for the last couple of months and even years, that companies understand they need to be more transparent, they need to take responsibility, and as investors we can cooperate with others and just increase the pressure on those large caps, because we need them in order to fuel the transformation of all the economy.
I very much agree. Thank you very much, Diana. And since there are no further questions, thank you also to not only you, but also your employer, Union Luxembourg, for hosting this session. I also would like to say a big thanks to our LuxFLAG team for making all this happen again. And I would actually like to conclude with a quote, because it resonates quite a lot with me, and I hope it will also resonate with the others in the audience, because on one slide you said you want to buy caterpillars to offer butterflies at one point in time. So it's actually a quite nice illustration of the intention to be an early stage investor, to really capture the value of transformation. And I guess this is all what we need to make sure at the end in the sustainable finance, to make sure we basically help firms to transform. So thank you very much for this. And with that, I would like to close the session. Bear in mind, our next session actually is starting at 11:30. In both a digital as well as a physical format. It's hosted by Edmund de Rothschild, focusing on the opportunities and challenges of impact investing, another big topic these days, debated a lot in the industry. So thanks again, Diana, and wishing you all a great day. Bye-bye.
Thank you. You too. Bye.